How often do you review insurance coverage that you currently pay for? That's a very good question. So welcome back. Sorry for the missed week there. This last week was a bit of a doozy. We have all kind of had this head cold and not felt real well. So we are just now recovering from some congestion, some aches and pains, but we're on the uptick, so everyone's doing better. So sorry for the delay. So this week, I'm going to kind of tell a story on something that made me go back and remember that it is always a good idea to review policies or subscriptions or services that you pay for that maybe you're paying for a year in advance, or you have something that needs to be updated, or something that you just need to look at better. So the last couple of weeks, our oldest son is going through the process of finding his own car insurance. So I told him, hey, go online, find a couple of insurance providers. I gave him a few names. Of course, they're the big ones. And asked him to go and either go through the online process or talk to an agent, say this is what the situation is, and get quotes on those. And so I gave him what the existing coverage was that we have, and he went through and did this. He did a good job and kind of learned in the process. But one thing that I learned, that it is probably a good idea to go back and assess your coverage every year, or maybe if auto insurance, maybe it's every 6 months, because that's when they typically write those policies for. But just to go look and see if, one, am I covered adequately? Do I have enough coverage? Is all the information correct? Are my vehicles correct or whatever? But what I got to looking at was, okay, our house insurance. Well, that's one of our largest expenses for the year, is insurance for this house. And it is written on an annual basis. It's paid through our mortgage. So we typically don't see that. We put in escrow every month within our payment, and every year that policy gets renewed. Bank will go and pay the insurance company. Okay, so I know it's a fairly large number because I looked at it annually. It just recently renewed. But in part of the process of us going through this journey is we're realizing that, and I've mentioned this before, that we are probably going to be selling our house at some point. And so I started looking, thought that was a good, something I should do is look at, one, what is our current policy? What does it cover? What are the limits on it? What is the basis of the value of our house? And see what can be done about this. So whenever I looked at it, and most typical house policies are written on a replacement cost. So it takes square footage times what it would cost to rebuild the house as it currently is. Well, our situation is we're pretty definite we're going to be selling this house and moving or doing something different in the next, we could say 6 months, because that's kind of what our goal was. We were going to look at doing stuff and starting this almost a snowball of events that are going to help push us into financial freedom. And part of that is selling our house. So I got to looking at it, and of course our house is written on a replacement value. So if you know us, it's the house that if something was to happen to this house, it wouldn't be cheap to rebuild. And we got to thinking, it's like, okay, if something did happen to the house, we're not going to build exactly the same as it is, because one, we're looking to downsize. So obviously the square footage is going to be smaller. And so that got me thinking is, okay, we're paying X dollars for this policy to cover our house in case something happened, to rebuild at that value. And so I called our agent, and it's an agent we've had. I think that we're with the same company for the last 10 years since we've moved to this area. They do a really good job in working with us and making sure our coverage is in place. But I got to thinking, it's like, okay, maybe we don't need to have replacement costs covered on this house, because we really aren't going to replace this house as it is. We're looking to downsize. So I got to talking to our agent, and he said, hey, why don't we write it for market value? Well, that's taking what our house is currently estimated to be worth. Well, in doing so, our policy dropped almost $1,000. That is what we're paying previously versus what it would change if we changed from replacement cost to market cost. It was almost a 19% decrease. I mean, that's going to save us quite a bit of money over a year just by doing that. Well, now we're not possibly going to have this house over the next year, but that's going to help us kind of align our costs with what our expected expenses should be. So we sat down and talked about this and thought, hey, that's going to be a good idea. Let's go ahead and do that. And that also got me thinking, what else do we spend money on that we should be assessing on a annual period? And there's lots of things. I mean, we have all these other expenses. I've already talked about all of our subscriptions, all of our services that we pay for, and we need to be assessing those on an annual basis or even on a shorter term basis. Maybe if it's a subscriptions, maybe it's something we don't use all the time. Maybe it's those like the streaming services. So in our journey to financial freedom, we are learning that assessment is something that needs to be done frequently. Without doing so, we just gonna get stuck in a rut, and maybe it's a bad rut because it might be costing us a lot of money. So as we continue on this journey, we're going to be looking at continually ways to save money, ways to reduce our expenses, because like I said earlier, if we're not increasing our income, the easiest thing for us to do is reduce our expenses. That helps us to balance our budget and get us into a place where we're financially fit and being able to see that freedom. So in the next few weeks, I'm going to go into kind of a mini little series about a process that we kind of started this early in the year, but it's going to be part of this journey. And it's the house that we live in. There are things that we're having to do to it to prepare for the ultimate sale. And we're going to look at some things that we've done, some things that we've doing to, one, increase the value, increase the curb appeal, if you will. And then things that we probably just need to do because it makes sense to have repairs done to help us have a better market presence when we go to the market to sell it. So that's what we're going to be looking at in the next few weeks. But as always, we need to remember why we're doing this, why we are on this journey to financial freedom. And it's because we want to glorify God in all that we do. So Colossians 3:23-24 says, whatever you do, work heartily as for the Lord and not for men, knowing that from the Lord you will receive the inheritance as your reward. You are serving the Lord Christ. So thank you again for joining us in this week. And I hope that as we're going through this, we can be an encouragement and maybe give you some ideas to think about. So again, thank you, and we'll look forward to seeing you next week. Bye.